Hi, everyone. Thanks for joining. We're back for another episode of Lifestone Crypto Chronicles, and I'm here with Marco Tarshun. Myself, I'm Bogdan Golumbanu, and today we're going to dive deep into learning how to invest in cryptos, just because they're quite a very popular, let's say, asset class to invest nowadays. A lot of people are trying to find extra returns, but usually they find extra volatility. So now I'm going to pass it to Marco, who's going to introduce you to this topic, and then we're going to continue with our discussion. So Marco, over to you.
So hi everyone, welcome back. I think this episode today is going to be very interesting because I think it's the most fascinating thing about cryptocurrencies is about investing, trading, and how to store it, etc. So just kind of an introduction, so we can go straight into it. Investing in cryptocurrencies is something that's very different from what you can get from the institutionals or like the common stock markets, especially for the for both institutional, retail investors and traders. Most of the time, what interests people with cryptos is the very high reward aspect of it. But what they actually like to understand is that there's also a very high, high risk, but also high reward. And that goes from the volatility of the market because of it being traded on 24/7. So, you go back to sleep, you wake up, it's a different price, and you're like, fuck. it gets to a point like there's just a big change of it. And so because of that high risk, high reward, you can either gain a lot of money or on the other side, lose a lot of money. And what has happened recently is that, and that's obviously a topic that I will go further a bit later, is the issues with leverage. A lot of people on the institutional financial markets like to use leverage. On crypto, you have more of a flexibility with it. I know that some people can do 2x, 10x, 20x, up to 100x leverage. And when you get to 100x leverage, you gotta make some money because if you don't, you're a bit screwed. For crypto investors, they also like to invest in digital assets because of a hedge of their net worth against the fall of the dollar or their own domestic currencies. This is because obviously before COVID, but also with COVID, because of central bank printing through QE, and also the different types of stimulus packages that have affected the financial markets with Robinhood and all those different type of GME stocks, for example, that kind of creates kind of a high behind it, and it has obviously impacted cryptocurrencies. We have to accept that. Cryptocurrencies also bring the social aspect behind the philosophy of free and hard money for the whole world, and not just for the institutional investors that actually grabs a lot because of the money that they have and impact the markets through certain manipulations. Even though we also obviously can also get manipulations, it's, I would say, more of an asset for the people because it started a lot by the people and then more and more getting from institutional investors. And then last, and that's more someone like me, is the technological aspect of it. And also next to the philosophical aspect of it, I was very interested about cryptocurrencies because of technology of blockchain, and also my further reading of Austrian economics and what is sound money. And with the differences of gold and silver, now the young generation wants to get into what we call digital money and then cryptocurrencies. So that was one of the big reasons that made me fascinated by it. And then lastly, with investing in cryptocurrencies, there are a lot of very bad reasons to invest in cryptocurrencies. And a lot of people, especially nowadays, fall into the kind of crypto bubble. This is captured by the classic FOMO, fear of missing out. People are seeing that it's increasing. They want to actually enter the market. And they are always at a time buying massively at the peak of the bubble, and then just to be able to make some quick money. And that is sometimes without the actual understanding of the cryptocurrency. And that's a bad reason. Don't do it because you are most likely gonna lose a lot of money.
No, 100%, and I can relate to that definitely. Like especially whenever Dogecoin was at all-time high, I thought, well, there's only one upside to the moon. So I guess if you'd have bought there, you just like incur huge losses. But I guess it's the most important question that everyone is asking today is, how can you invest in cryptos?
Oh, well, Investing in cryptos is something that's is very easy to do. But firstly, you need to and right now, yeah, you need to actually start small. So like the stock market, but even more, the crypto market is very volatile. With the unpredictability of the rise and fall, and can actually make someone lose or gain a lot of money. But for you, and I know that is very that makes sense and is very common sense kind of logic, is that you need to have enough liquidity before you actually invest. I think that's like common sense. And please, please, please don't have any type of like debt from previous investments, etc., or like very aggressive debt, because it's just not very good to actually have a good mindset and have a long-term strategy. Obviously, we'll talk a little on about trading, but for me, it's a very long-term strategy. If you have a long-term investment strategy, you don't want to have a lot of debt on the side, because then it's just going to compromise the whole of it. Once you're clear about your kind of investment strategy, I would say first, even though I didn't do it, it will be very good for you to first invest in stocks, kind of understand how investment works, why it is to buy a stock, etc., kind of understanding the whole financial markets before going to the crypto markets. I didn't do that, but at that time, I actually think I should have done that, just because a lot of the mistakes that I actually made when I first invested in cryptocurrencies was me not understanding the financial markets, the different terms, the different things, and getting really into the hype that at that time when I bought it, Bitcoin was at 3K. And because it was 3K, I was like, oh, it's really hype. It was in March 2020. It was doing the huge crash. And obviously I go into the hype of it. So don't do that. And, after doing this, if you have an investment portfolio, look at investing maybe 5 to 10% of your investment portfolio into your cryptocurrencies when you start. After, you can actually increase a little bit more by understanding more the markets and knowing how the different trends work. The thing that is interesting is that cryptocurrencies are investments that is not like a normal stock. The thing that would compare it is probably, I would say, all the GME stocks or the growth stocks, is because they actually don't provide any types of dividends. And so the only way for you to actually make money out of it is through capital gain. Basically, you buy low, the classic. And so just like as to say, gold or silver, they actually don't pay an interest dividend. And so this is why it's all about benefiting from an increase of the price, or buying from a decrease of the price. And because cryptocurrencies weren't designed to be natural investments, that actually creates sometimes a bit of a confusing aspect out of it. Because if you watch the first episode, and if you haven't, you should, which actually talked about cryptocurrencies, blockchain, and technology behind it, and the history of it. Cryptocurrencies are actually a medium of exchange. And so they're seen as an alternative to sovereign currencies such as the dollar, the yen, and the euros. And so they're seen as an alternative, as a mean of payment for different types of commerce, especially on the web. Obviously, right now, because it's only 12 years, it does not actually have the legitimacy yet to actually become a mean of exchange. So right now, it's mostly traded between individuals, then between individuals and the different businesses. So with time, for all the other cryptocurrencies, it will have some sort of impact. But at the moment, it's basically almost purely speculative or for investment purposes.